Welcome to today's Seamlss webinar on AML, the Accounting Forum, where we want to have a bit of interactivity and a bit of learning along the way. We were joined by Ags, founder of LYRA Risk Compliance and AML Implementation Solutions Specialist. It's what she does for close to 2 decades, experience across UK, Europe, Australia. She's been through it all, worked across multiple jurisdictions, really like lots of regulated environments, helping different organizations just translate that complex AML obligation and overwhelm. I was just saying to Ags before, all accounting firms, accountants, we are all super busy. I am so flat out enough doing accounting. Now I've got to focus on rolling out AML. Today's session, Ags will walk us through the AML 101 overview, covering just that end-to-end AML CMF obligations key framework, what this means for your practice and your business, just all of the reforms that are coming. This is high level. I believe, Ags, it's not just a deep dive. This is about opportunities. We'll have questions and things like that, hopefully either throughout or at the end. We want this interactivity. Down the bottom right-hand corner, you can put in the comments. Yeah, thank you. Welcome, Ags.
Hi, thank you very much, Clayton, and good afternoon, everyone. My name is Agnieszka, or Ags. I am in kind of sunny Melbourne, and in Melbourne true fashion, it'll be 39 tomorrow, and it's about 20 now, and it was raining and 15. So if I don't like it, it'll change, I know. So happy New Year. Hope you're all good and you are well rested after some breaks. And as you look forward to the looming 2026, obviously one of the key things that we're looking towards is the implementation of AML CTF reforms. I'll just do a quick intro to myself and then we'll dive in. Sorry, I've got this pinging in the background. So it's just that pinging in the background. It's slightly disconcerting, but I'm learning to love it. Like a doorbell, continuous doorbell. So thanks for the intro, Clayton. So my name is Agnieszka, or Ags. Feel free to Clayton's the man on the chat, right, Clayton, and maybe Dan's on too. So if you have any, just shout and then they can relay them back to me. So I've implemented financial crime risk solutions across the board in financial services, predominantly in banking, where I've spent 20 years of my life. I've worked in about 7 banks across multiple jurisdictions, and I started working in the space in about 2007 when the first large fine started landing from the US regulators to UK and global banks. At the time, we thought 280 million was a big fine. Oh no, it was bigger at HSBC at 1.2 billion in 2011, where I also worked, and BNP Paribas with 9 billion, where I did not work. So I've kind of followed a lot of the enforceable undertakings as well as fines throughout my career, which kind of makes sense. And I think a big learning lesson from that is you don't want to be fined or be under an enforceable undertaking, because that will cost you a lot more had you not done that work up front, which is what AUSTRAC is trying to do now, AUSTRAC being the regulator that is bringing in the AML CTF reforms. So I've kind of worked under various of these enforceable undertakings. Some a monitor on the top. A monitor is exactly like you'd say somebody who dobs on you if you've done something wrong in class. So that's similar. The monitor is appointed by the regulator where you've done something wrong, and they sit on your shoulder and go, oh, you're not doing that, you're not doing that, that's wrong, that's wrong. And then they charge you for their time, and then you have to fix everything that they say as well as do your other fixes. So some of the banks I've worked in have been under this monitorship, and it's a very painful place to be. And I think there's some organisations in Australia now who are under this monitorship, and it is a very painful place. So I think what we have a really good chance of doing now is taking some of the lessons learned and building on a greenfield site and putting things in correctly from the first go, which, you know, AUSTRAC don't expect perfection. They just expect that you've started and had a go. So if you make the right decisions and actions and you've actually start thinking about things, there is very little, I think, that AUSTRAC will find at fault with that, because you've just started. So what I wanted to do today is walk through some of the obligations, and we're not going to be doing a deep dive. It's more of a broad overview. So yeah, do shout if you have any questions. And before we start, I'm just going to start with one example. If we could go to the next slide, please, Clayton. So a few years ago, a 24-year-old called Lynn took what he thought was a customer service job overseas. His family helped pay for the ticket. It was a lot of money. He came from Vietnam or another kind of one of the poorer Asian countries. And when he arrived, in the country where he would thought his customer service job was going to be, his passport was taken. His office actually ended up being a room with barred windows. There were guards at the door, and there were just rows of people in front of screens. He hadn't joined a call center. He'd actually been trafficked into a scam compound. His job was to be a friendly broker and sell financial solutions and convince people to place their money into bogus investments. If he didn't hit his targets, he was tortured. And if he wanted to leave, he was told he couldn't. He had a debt that he could never repay. And the reason I've given this example is because scams and fraud are a part of the financial crime ecosystem, as you can see now. And the money that he was scamming the victims from, which could be Australia or any other country of the world, didn't go straight to the bad guys. It went through a series and a chain of companies, of trusts, bank accounts, almost looking individually completely normal on paper. But somewhere in that chain, there was a professional, and somewhere in that, across that chain, you could see the pattern once you looked at it end to end. And I think the story is important because it's a big part of the why we are doing this. You know, money moves, money is laundered through a series of transactions or a series of events. Not everyone in that chain is a bad guy. They could be very good guys who are unwittingly enabling that money to move along. Modern slavery, which is where our unfortunate friend Lynn found himself, as well as other predicate crimes, are a big input into that money laundering chain. So why are we here, right? So we've got new regs coming in for accountants as well as entities. You're not alone. You're obviously alongside with lawyers, conveyancers, real estate professionals, and some trust providers. Your new regulator is AUSTRAC, the Australian Transaction Reports and Analysis Centre. AUSTRAC has two roles. It's a regulator to make sure that the rules that it brings in place, we've just gone back, sorry. That's right. It's a regulator, so it reviews how the new regs, the regulation are being implemented, and it's also a financial intelligence unit. So it takes the information that we will provide it, all the industries that are regulated by it, and it will smush that information together with other information from other regulators to help determine where there might be patterns, where there might be crimes, and then they give that information to our law enforcement agencies, both in Australia and internationally. So they create a whole lot of data sets, which are then utilised to help catch the bad guys. It's not a new regime, by the way. It's been around for a very long time. In Australia since 2006 for our tranche 1 entities, which is all the financial services companies. But for tranche 2 entities, it's coming in this year, at the end of 2024. If you're looking at other countries, pretty much every single country globally has put these regulations in for your industries. Australia is sitting, last time I checked, next to Haiti and Madagascar, next to countries that haven't put this in place. As a comparative example, UK put their this regulation in for accountants, lawyers, etc. We call them the gateway professions, 2004. So we're only a little bit behind the 8 ball. I mean, what's 22 years amongst friends, right?
Nothing.
Nada. So look, so and if you look at the stats, oh, you're jumping to the slide.
Right.
That's all right. If you look at, and if you go back one, I just wanted to finish one thing. So all these, so the Act focuses on terrorist financing and money laundering. I'll talk about both in a little moment, and sanctions. There's also an addition of proliferation of weapons distribution, and that is linked to sanctions. And in terms of some of the stats across the world, last May, we had money laundering stats was around 2.2 to 5% of the global GDP, which is around 2 to 5 trillion US. Australia has around 10 to 15 billion annually, with 60 to money laundering, and 68 billion going to serious and organized crime. And slavery is around 50 million people enslaved globally, or that's very, very conservative, and about 40,000 modern slavery numbers in Australia. So the key thing with this regs is that we're tightening the net, supporting our regulators and keeping our communities and our social infrastructure safe from the real devastating impacts of financial crime, which you can see on this page. So if we go to the next slide, so money laundering is an umbrella term that we use kind of for all fin crime activities, but really it is about disguising where the money comes from. It comes from, actually, I've got a video on my LinkedIn if you want to watch it. I did it ages ago. The term was actually coined because of Al Capone's. Al Capone was actually gotten on, as you might remember in the film, The Untouchables. He was actually gotten on tax evasion, and he was gotten because they actually could prove that he was putting his money through his laundromats. He had this laundromat empire, and that's where the term money laundering came from. It came from taking dirty money from all your nefarious activities, whether it's drug smuggling, whether it's modern slavery, whether it's corruption, whether it's fraud, yada yada, and then all of that is then washed through a laundromat, money laundering, and hence the term. So you can see that, well, you might hear a term called predicate crime. A predicate crime is the crime that then the money from that is used to, that needs to be cleaned. That goes into the process of money laundering. So money laundering is about taking various, taking a few different routes to clean your actual money. The money laundering is, the anti-money laundering regime, I view it really as a new way of looking at your clients, right? So it's a new risk lens, and that risk lens will then help you make decisions on what to do with those clients. Do you want to onboard them if they look a bit dodgy, or should you not, for obvious reasons? So, and then you see the tranche 1 and tranche 2 there at the bottom. And terrorist financing is when you raise money to help carry out terrorist attacks. The difference is it can come from legal sources. You may have money being raised through legal paper charities, and then that money then going through to fund terrorist activities. So the process is a bit different. But the outcomes are obviously devastating, as is with money laundering. Shall we go to the next slide, please? So I'm going straight into the obligations now, and we can do a bit of a deep dive in the next session, as well as some implementation guidelines. So the first thing to say is that, as I've said already, you don't need to be perfect for day one. You do need to have a start, and you need to have some things in place, but you have time to finesse the process and finesse your operation. But you do need to make a start in getting something in, so that when the regulator does come knocking, and when you have to submit your first report, which was the following in March, you actually know what you're submitting. So I've grouped the doorbell. I've grouped the obligations in 3 different areas for kind of ease of understanding. You've got governance, process, and monitoring. So under governance, you've got designated services, AUSTRAC enrolment, and the AML compliance officer. So designated services we've talked about earlier. And the way I think about the AML, I kind of think about it as an AML pipe. right? And the designated service is the valve that turns on the AML pipe. Designated service is what you provide to one of your customers that will then be caught under the Act. So not every service that you provide will be caught under the Act. However, things like, majority of you will probably do this, setting up companies for your clients. What else, Clayton? My mind's got into a blank. Setting up companies, providing
fantastic services, turning on your director audit, adding directors and changing those sorts of things.
Restructuring on behalf of your clients, but submitting accounts on their behalf is not a designated service.
We can go into designated services later, but I think the key is just we're all going to get captured by them at some point, and we need to be aware of our obligations to.
You will probably have one. It will be unusual if there's an accountant who doesn't have a designated service. But it's really around structuring companies, setting up companies for your clients, rather than submitting any kind of ongoing information to the tax office. This is not. Yes, there are 9 designated services. Some of them emerge. That's right, for all professional services, yeah.
We went over that in the last webinar, so if you want that, just reach out and we can email it to you.
And it's also on the video, right?
The last webinar, yes.
The last webinar, so you can have a look at the video, exactly. So, so the designated service opens your valve, and then the clients go through the onboarding, the onboarding flow. I can hear some typing. I don't know if that's you. AUSTRAC enrolment is when you are a reporting entity, you have to go through a specific process, which is not onerous. I don't know how long it'll take you. It depends on your size company, and you need to provide information through the AUSTRAC portal around who you are, what your company is, some information about the company. And say I'm enrolling that I'm a registered entity under the AUSTRAC, under the AML CTF Act. Just to let you know, AUSTRAC does have very finite and definitive lists of all the new Tranche 1 entities, so they will know if someone hasn't enrolled. I'm sure you all will. I'm sure some people may not want to enroll, but it makes sense to enroll because AUSTRAC will know if you haven't enrolled, and enrolment will start at the end of March. Your AML compliance officer is a formal compliance role that someone in your organisation will have to then be the main point of contact for AUSTRAC, and they will need to oversight and understand that process, and they should and will own that flow, depending on how big you are as well. You either may have one person doing this part-time, or you might have a couple of people doing this, depending on your client size and your client types. And they're really the person who has got everything, who says, yep, I understand who's been trained. Yep, I understand what my processes are. Yep, I understand what risks we have. Yes, I know what we're doing. And yes, I can talk to my senior management and people on board, as well as the regulator, that I can explain what risks are posed by my clients, by our clients, for our organisation. Then under process, you've got the key kind of building blocks, I would say, of AML CTF. You've got your program and policies, you've got your risk assessments, you've got customer due diligence, and I'll talk about risk assessment and customer due diligence on the next slide. They're a bit more involved, as well as the reporting. You've got the AML CTF staff training, you've got transaction and monitoring and reporting, and you've got record keeping. So I'll talk about a couple now that I don't have slides on, because it's a lot. There is quite a bit. So the AML CTF program and policies, the AML CTF program is really your, for want of a better phrase, your manual or your Bible, right? This is where you say, this is what we do, and this is how we do it at a high level. Now, you don't have to come up with it from scratch. AUSTRAC is providing what it's called a starter pack. You can call it a guideline, you can call it a template, you can call it whatever you want. But it is effectively a template that you could utilize and then update for your company. Now, the starter packs, I think, because I haven't seen them because they haven't yet been released, but it will be utilized for, you could just lift and shift it if you're 10 people and under, but again, don't quote me. I need to just see what the latest guidance on that is. They were going to release some new stuff.
End of January now.
It's the end of, yeah, well, that's pretty, if we're lucky, yeah. So you may be able to utilize that exactly. Some of the bigger guys, you may need to, sorry, Clayton, there's a bit of typing, which is a bit loud. So some of the bigger guys will need to do a review of that and make sure that it is tailored specifically for your organization. So it kind of has all the different components of the AML program and obligations, and you talk about what you do and what kind of risk and what kind of clients you have. It's normally about 10 to 12 chapters. And I don't know, I'm making up. It could be 5 to 10 pages per chapter, depending on your size. And they could be really quick.
We'll know when it comes out at the end of the day.
Yeah. So the risk assessment I'll talk about in a moment. The customer due diligence we'll talk about in a moment. Same with reporting. Training, I don't have a slide on. So you need to train your staff, and they need to be trained annually. There are companies that will provide the training. We're working on some at LYRA. I think you're going to be doing some as well, Clayton, under Seamlss. But you need to show that A, your people have been trained, and then B, you need to have a record of that training. And transaction monitoring, I'll talk about under CDD, and then record keeping we'll talk about later. But that's a kind of the high level flow. And if you think about a process flow, you have designated service TAP. Do they have a designated service? Yes, there are 9. How do they flow? What do you do straight away? You onboard a customer, and then when you onboard, you do a risk assessment and customer due diligence. Then as you go through your relationship with them, you may need to do some reporting. We'll talk about that. And then you need to do record keeping at both the point of onboarding as well as later, because you'll need to do some ongoing due diligence as well. So it's key that you've got a system that has all the data about your clients, that is their core information, and any other investigation information that you've gleaned throughout the relationship with them. And it's all accessible and retrievable.
And this is all the information. Like if you're reading this screen now, this is the things we need to do and implement and create those policies and processes and systems around. And obviously Seamlss can help with that. AGS and LYRA can help with implementing that in your firm. But the other thing I want you to be aware of, yes, onboarding will trigger some risk assessments to be done and possibly trigger some AML. But one of the key questions that a lot of people have is around what is going to trigger it. And we talked about it in the last one. You could have a current client that you need to go and do AML checks on while they're already a client because they've triggered an AML designated service. We're not going to go in that today, but just be aware it's when you're onboarding and when you're engaging clients in new services like creating a company.
Yep. And look, sorry, we haven't included them here because we did do a fairly detailed session on this in December. So have a look at that content, and you can always shoot any questions through to me or to Clayton afterwards. So customer due diligence. So CDD is a core, like this is really the engine house, right, of AML, anti-money laundering, because it's where you compile all this information about a customer, client, and decide what you're going to do with that information and decide whether there's going to be any risk. I probably should have done risk assessment at the first, but that's okay. We'll do the risk assessment next. I'm not following my process. So customer due diligence, and sometimes you'll hear the term KYC, know your customer. In Australia, they're interchangeable, like CDD means KYC. In the UK and some other jurisdictions, KYC plus ID&V equals CDD. But for Australia, KYC and CDD are the same thing. So the first step is you need to identify your client, which I think you're already all doing anyway. So that ID is, for instance, you need to get their name, their date of birth, their residential or business address, and then if they're an entity, what the structures are for that entity. And then you verify that. So probably a lot of you already use various sets of verification tools. Obviously, Seamlss is one. And when you do that verification, you do that through collecting information about the individual. If it's a company or a trust, you then have to work out in stage 3, who are the beneficial owners and who are the controlling parties. And by beneficial owners and controlling parties, so that's anyone with a 25 or greater ownership or control of that entity. That is a beneficiary. In banking, we have a term of UBO, ultimate beneficial owner, which I'm not going to go into the detail unless we do a specific detailed deep dive on CDD for some of you if you have more complex structures. And what you do in steps 2 and 3 is you're verifying that the information that you've been provided makes sense and there is nothing untoward. So you need, Clayton, do all accountants ID and V?
Yeah, as a part of the requirement with Tax Practitioners Board and the ATO, we already do ID checks. The key will be is that whatever it's done is verifiable, which is already what we're doing. So a lot of the stuff we are doing it, and I think it comes back to the next slide around risk assessments and stuff like that, yeah. and identifying that as a part of that onboard and ongoing relationship, and that's where the CDD comes in.
Yeah. So I think maybe the new thing is the control structures. So when you are onboarding entities, what does the control structure of that entity look like? Yep. Who are the Benny owners, and ID&Ving all the Benny owners, and paying attention to the structures, in particular where there's layers of structures, and in particular where there's some international companies involved, where probably most people don't have that, but you may have an exposure there because money laundering generally happens through like complex series of different organizations that are owned by different people, and money moving across these different chains, and that's where you're going to have the greater risk.
So with that number 3, Ags, I think one of the key, it's very broad stroke comments there. The main thing that I get from it is usually that it's about that control. If someone's got a fair amount of control, that 25% mark or above, they're the people we're doing ID checks and further risk assessments on, and that's correct. Like if someone's got 100 beneficiaries and they've got no real say or control over the entity, then you're not going to ID check every single
No.
So, and I think that's the key thing I want people to take away from this screen.
The one thing I would say, though, with the controlling nature, a controlling may not have a 25% ownership, but they may hold a controlling role. So they might be an MD, they might be an CFO. You need to apply some sort of
training.
There is specific training in this area, but some sort of nous, like be practical around, does that role look like that? If you think they've got control, ID and be them.
Yeah.
Complete a customer risk assessment. We'll talk about that next. So where a customer is high risk, and we'll talk about what a risk assessment is and what a high risk customer is, you'll need to do some additional things, and that's understand the nature of that activity. So what is it? Why are the clients asking you to do what they're doing? What is their business activity, and what is the reason for that transaction or the reason for their business with you? And is it consistent? Are your findings then consistent with the information that you've already gleaned across the company and the individual? So if there's some examples, and we talk about some suspicious activities later, but if something doesn't make sense, like a company and an individual then has got a a different business practice and they're utilizing you to do something completely different in a different industry that has nothing to do with the company that they are setting up, then that should ring some alarm bells. And then you might need to submit a report, which we'll talk about later, called a suspicious matter report. So if there's any red flags, if there's any kind of things that don't make sense, this is when you submit a suspicious matter report. You also, during due diligence, do screening, which is PEP screening and sanction screening. A PEP is a politically exposed person. That's anyone who has a linkage to a state-owned or controlled company, and anyone, family member or close associate is a PEP. So there are lists of PEPs, and what happens is a tool such as Seamlss will take the name of your client and match it against lists, and will tell you what that match then looks like. There is some technical things within the matching algorithms and things. I won't go into that, but that's probably the only bit of rocket science, or it used to be, is around how the matches are made between an individual name and the full list. And the lists are provided by companies like Dow Jones, and you would be utilizing the Australian PEPs lists. And for sanctions, a sanction is, as you know, imposed by jurisdictions, countries, or regions such as the EU or the UN have sanctions as well. But Australia then would take it and create its own sanctions list. So sanction screening is to make sure that we don't do any business with sanctioned entities, and that is a very black and white part of our legislation. Thou shalt not do business with a sanctioned entity. So two separate bits of screening, one's against sanctions lists, one's against PEPs lists.
And this will all come about from your risk assessments, and when you're doing that due diligence, either upfront or ongoing. It's not like you're going to have to do this for every single person. This is where you're going to make those decisions as a part of your process and onboarding and that ongoing due diligence, and knowing when those things are triggered and when you're going to need to do
yes,
due diligence.
Yes. So this only applies to your AML pipeline clients. So if the designated service tap is turned on, you need to push it through this. Everyone will get screened, right? Not everyone will need to, you won't need to do everything in terms of step 5, but you'll always do step 6. You'll always do 1, 2, 3, 4, and 6. 5 is only if it's high risk, and then ongoing customer due diligence is ongoing customer due diligence. So that's monitoring any other transactions that they make. Again, I think that's probably more linked to banking and financial service than it is to this sector. But if your clients, and I don't know if this happens very often, ask you to, and there's been some red flags done in the past, ask you to give you some funds to pass on to another company through your accounts versus theirs, or if you find out there is some strange goings on in the transactions that you see on their accounts or the transactions that they make, then you should be submitting a suspicious matter report. So that's the kind of ongoing due diligence that you need to do. If also there's been a change to any of their details, you will have to redo their due diligence. So change in address, you have to re-ID and V them. Change in name, you have to re-ID and V them. Yeah, or change in structure. So there are 3 different types of changes that could happen that will trigger another due diligence round. Does that make sense?
Yeah, kind of. That's more for companies though, not individuals, isn't it? Like if everyone just keeps moving and changing rental addresses, you're not going to update do a full ID check on every single time. That would be.
Well, in banking you do. So it depends I'm going to need to check the rules. In banking, you would need to rescreen them. Yeah.
Even if they just moved, I don't get rescreened from the bank every time I move.
You don't know that. You do.
They're doing it automatically.
It's a trigger. Yeah, it's a trigger. You don't do it.
It's a risk assessment based approach, correct?
Yeah, it is. It is. So I think possibly from a banking perspective, it holds slightly different risk than for accountants, say. Yeah. So on the risk assessment. So the risk assessment is one of the first things that you will have to do, and there are 2 types of risk assessments. There is a customer risk assessment and a business-wide or enterprise risk assessment. The way that the risk assessments work, and AUSTRAC will give us templates / whatever I said they were called, they keep changing their names, guidance, is you assess a customer's risk by what type of client they are. Are they an individual, a company, or trust? Is it someone acting on behalf of someone? What type of, what kind of product or service are you giving them? Are they obtaining from you? Where are they based? And what's the delivery channel? Is it in person? Is it online? Is it through a third party? And then what happens is, this is like a 4-point risk assessment. There may be some more. What I don't know is where AUSTRAC is heading, but what we will get provided by AUSTRAC is this sits usually in an Excel that give you parameters for each of these, which will give you a number across what they think signifies a high, medium, or a low. All the 4 components are then aggregated to give you a number, and that will determine whether it's high, your customer's high, medium, or low risk. If it's low risk or medium risk, you probably get by with simplified due diligence, which is the due diligence that we just talked about before on the prior slide. If they're high risk, you'll need to do enhanced due diligence, and the enhanced due diligence is where you need to ascertain a bit more information around that customer, which includes where their money comes from, where their funds, it's called source of wealth, source of funds. You might hear a phrase. Source of funds is where their money is coming on a continuous basis. Source of wealth is how did they create that wealth that they're coming to you in the first place. So it's a little bit more detailed. The enterprise-wide risk assessment also has similar parameters. You would also add a couple more, and it looks at your entire company. So what does your company or enterprise, what kind of risks do you pose? And you would not need to do that all the time. So the customer risk assessment is done on a customer basis as they go through your AML pipe, but the enterprise risk assessment is generally done annually or biannually, probably annually actually, because then you understand where potentially cohorts of customers might have greater risk than others. And I pause. Does that make sense? Any questions?
I think with the risk-based approach on this screen, I think what I want people to understand most of all is that you ask some questions and most clients will be low risk. You're going to get through pretty good. If you're dealing with people overseas and things like that, you're probably going to trigger a few more requests, screening to do around AML. But I think like 80-20 rule, I feel like most firms, smaller local firms, will have very little risk. It's only when your clients are international, politically exposed, and maybe they are doing something a little bit dodgy that you might have to do a little bit more on that reporting side. Yeah.
So look, this is fairly bread and butter. So I'm not going to labor on this. I think the nuts and the bolts are within the CDD and risk assessment. But yes, you'll need to report to AUSTRAC. There are 5 reports that you'll need to do. One is suspicious matter report. So this is around where you think something smells funny, where something isn't right. And this includes where you think there might be a fraud or a scam involved, as well as money laundering or terrorist financing, or even something to do with sanctions. Essentially, there is no wrong answer here. You submit a suspicious matter report to AUSTRAC because that they use that information, and that's where they find patterns through other SMRs submitted through other organizations and other industries. And that's where they do some really cool stuff to match different data points and understand where there is some really good data patterns and matching, and this is what they then feed to law enforcement. So it's 3 business days just for a general suspicion, but if it's anything to do with terrorist financing, you've got to submit it within 24 hours. You then have a threshold transaction report, and that's around cash over 10K. So if there's any dealings that you get, and I think one accountant did say to me, he does have a client who pays in cash. So you may have a cash client. If they are paying in cash over 10K, you need to submit a report within 10 business days to AUSTRAC as well. And again, it'll all be pro formas on their portals. One thing I would say with SMRs and TTRs, that you should have some internal process where somebody does it, somebody reviews and checks it, and then somebody submits it. So it's not just like, I'm just going to plonk it in and whack it in. There should be some review process internally before you submit it out. International value transfer report, that's when you have funds moving in and out of Australia. They were called IFTs before. It's in one transaction, Mark, not over a period. Yeah. However, you may see that you have a few different transactions in a pattern over a period. You may think it is a bit odd, and you may submit a suspicious matter report on that. So then you've got, so on the prior one, you had the international value transfer. So that's to do with your international. If there's any international payments coming in and out of your clients, you'll need to submit a report on that. Again, that's more for a banking sector or financial services sector. I don't think you're going to be going through virtual asset wallets here. So
unlikely. I think if someone had lots of crypto and stuff was moving around a bit odd, you might put it in SMR, but it's probably unlikely.
It's probably unlikely. And I know there are some accountants obviously who deal with specifically that, which is a very different proposition, because they are already looking at the risks that crypto poses. And I'm sure they'll be quite close to that. And just on the last one before you jump to record keeping, sorry, Clayton, that is a big one. It's your last report is your AML compliance report, which is due, just go back, yeah, which is due the following January, Feb. And that is like a formal report where you say to AUSTRAC, and again, AUSTRAC might give us a guidance on what that exactly looks like, but it's not that complicated. But essentially it says, this is what we've done, this is what we found, these are some risks that we hold, this is what our EWRA said, this is the kind of some key things that we looked at if we had any high risk and clients that we look at. This is the kind of overall compliance report that we're submitting to you guys, and you need to do that annually. Okay, then there's some suspicious activities. So this is some potential examples of where you might have suspicious matter reports. There's some changes that a client can't explain, or sudden changes in their ownership and control. There's some unusual payments that they're doing, asking you to be involved with on behalf of their clients with their other business activities, which might just look a bit weird. They are potentially setting up some quite complex structures that don't really make sense. There is no reason for these structures. They're not very clear around where the money comes from, for source of wealth or source of funds. They're setting up a trust or a company, and there's no real reason for that to be set up. So there's no real business activity associated with it. There is a particular high-risk jurisdiction that they're operating in and out of, and they may have no logical connection to their existing business operations, and they don't want to give you their information when they're asked for it around KYC or CDD. And these kind of examples can sit across any industry, but it's certainly ones that we found to be a problem, these kind of red flags. And if we could go to record keeping, that's fairly obvious. You understand that as accountants, you need to make sure that your data is accurate, secure, complete, easy to retrieve. Usually it's 7 years for financial services. It should be the same for AML CTF. And you need to keep, sorry, this is property to transaction. I have taken that from my real estate webinar. So essentially any transactions that you have for a client, and any account, any records, or you already store all your client information, but you need to make sure that it is then linked to your ID information, linked to your CDD information, as well as the data on the screening, which is where a tool like Seamlss will link
it all
together. So when a regulator asks you, oh, I would like to know what your client Ags is doing, what's your information on her, you go into the system and you get a nice little data file that has all the information in one place.
I think that only thing that's going to be interesting on this one, Ags, is where it says keeping copies of identification documents. The ATO and TPB already have one of the better policies in the world, in my opinion, of not holding onto those files for cyber reasons. I don't recommend you keep a copy of an ID. It makes you a massive cyber security risk. So I'm fingers crossed that when the AUSTRAC guidance comes out, that is not a requirement, because I think it's the worst thing out there. All of the financial planners, all of the people in other countries, all are required to keep ID, and we are not. It's just not something that we should do, in my opinion.
I think
interesting to see what happens.
Maybe, and I completely concur with that. I think what you do need to keep is a record of the check and the date.
Yeah, we do that now. Everybody does that now. We keep all of this except for the ID documents, and I'm really hopeful that maintains what the ATO TPD hold, and they don't change it. But we have to wait and see. I
think that makes sense. I think that makes sense. I think when they confirm that the data is held, it's to make sure that you've completed your steps in the process and you've got evidence of that step. That's right. It's not the actual thing itself. Yeah. So look, we are over time. This is a tranche to implementation timeline where we will talk about that a bit more in the next session that we're going to hold, Clayton. So we won't do implementation planning yet, but really you're probably in the phase 1 awareness and prep if you're here. If you're not, that's great. Really speaking, depending on your size, you could be working with by yourselves when the guidelines come out, or you can certainly have a chat to Seamlss or to LYRA around what we can help you with these phases. And then if we jump to the next slide, the worst thing I think is looking at something in all totality and being overwhelmed and not being prepared. So I would urge you to start thinking about how you're going to plan this out. There is now 4, Feb, March, April, May, 5 months left. And there is a bit to do from training your people to understand what you need to get done, understand what designated services you have, understanding what your budget is, what you're going to implement, what tool you're going to use, how you're going to comms it out to people, and then actually building up the things from Feb onwards. So these are the steps that we've put together, and Clayton and Seamlss have put together a really cool little tool checklist that helps you do that. But I suggest you also have your own plan. And in that plan, you also look at what other things you've got going on for your organisation, because obviously this is one of many things that you've got on. And understanding what you need to do here will feed into your overall organisational plan as to how you manage your people and your resources and your money in the right way to get to the outcomes of July and beyond.
And I think the key thing here, all I want people to be aware of is, I feel like your firm size will matter, but you can start working on the little things. I know from my perspective, we've done a little bit. I'm now more aware of AML than ever. Obviously in my job in Seamlss, it does help, but I assume that everyone's just like me. They're still trying to work through that process. I feel like if you've got a big team, you've got a big amount of work to do, and that's where you really need to look to engage people like Agnieszka to help roll this out and make sure you get it done. We will go into this in a lot more detail on the next session about where you're at, where you can go, what are the next steps. Bring your questions. We've gone into a fair bit of details today. I apologise. I'll go over a couple of quick questions, Ags, that people had. So what's going to happen this one was an interesting one with clients.
Oh, you've just gone on mute. Is that me or is that you? Can you hear me? Yeah, I just lost sound. I don't know about if other people are the same.
Sorry. The question is what's going to happen if clients get rejected? So if I reject the client, they don't pass the checks, what's the outcome?
You've exited them. They're not your client. You just record that on the day that you've rejected them. It may be that you are still, something doesn't smell right. You can still submit a suspicious matter report, but you don't have to onboard them. You just keep a record of what you've done. And also, very importantly, the decision that you've made, right? Whatever decisions you make, you need space to write down your decisioning.
And then obviously you just say, we can't assist you, please find someone else or something, or?
Yeah, exactly.
Yep. So another question was,
you don't want to say to them, we don't want to onboard you because you think you're dodgy, right? So there is a whole thing about tipping off. Like, you don't want to be telling anyone that they're not your, and I'm sure AUSTRAC will give us some wording around what is the best wording to utilize for your industries. Yeah.
Someone said, are we just duplicating everything the bank's already doing? The banks are doing what the banks need to do. We're doing what we need to do for our designated services. They have their own thing. We're not duplicating what the bank's doing. They provide AML responsibilities and assist the AML process overall for the whole world in a different way to what we do. And that's why it's important that we all work in this together. Mark asked about $10,000 in cash in one period. So yes, $10,000 is the trigger. I mentioned there's a reason. So if at the end of the day you had multiple $9,000 cash transactions, maybe just lots of various cash transactions, that's still suspicious. You still need to think about that, and that might trigger a risk assessment that you need to commit. One of the other questions come up in one of the groups. At the end of the day, just because cash is okay, it could also be seen as tax avoidance. And one of the reasons to submit an SMR is tax avoidance. But we're tax agents. We should be doing that anyway. So there is things that will be captured under those various cash transactions. Yes, there is a requirement to automatically do things, but I feel like you need to be aware, just by being under the amount doesn't just escape your AML requirements. Ags, is that fair to say?
No, that's right. That's right. Look, you don't have to submit a TTR. TTR is for, 10K in CAT, 10K and over. However, you can submit an SMR at any time, right? Around with the right information. So exactly as Clayton says, if there is a series of cash transactions that don't make sense or that come very close or something just doesn't smell right, then you do your submission by an SMR.
Questions. Another one was, do we need to ID check all the beneficiaries on a trust? So if there's hundreds, we talked about that before. It's about that control and those roles. I think when I'm trying to remember the bloody name on the trust, not the settler, it starts with A. Someone help me on the chat. You'll need to do an ID check on them potentially. Yeah. Damn it. Appointer, that's it. Thanks, Mark. I'd sit there and just start the appointer. If the appointer, I feel like the appointer is a very controlling person on a trust. I feel like that's something where we're going to have to start asking for and potentially doing ID checks. Again, really keen to see what the guidance comes out from AUSTRAC on that one.
And hey, Clayton, just on that, there should be checklists that will be provided by AUSTRAC around the different entity types and what types of controlling or beneficiary, what roles.
What's going to represent control.
ID and be in control. So that's what we used to do in banking. We had, I had 20 or 30 different types. We had all the roles mapped out and whether they required you to check those roles. So we should get that information.
Someone's asked if we have to do a police report on ourselves to register for AML. I don't think that's a thing.
So the reason someone's asked that, because within the Act, there is about the AML compliance officer should be a responsible person. And for some organizations and in banking, we do police checks when you go into the roles. I don't think it's going to be mandated for all AMLCO roles, but it is there that an AMLCO should be a responsible person. And when you onboard some of these into some of the larger companies, we generally tend to be police checked.
I think this kind of got covered in the last round of TPB updates on having people responsible roles in accounting firms anyway, so I think we'll be okay in that sense. The reporting of suspicious matter reports, threshold transactions, all that sort of stuff, it can be done through software, or can it be done through the AUSTRAC website? Do you need to pay for this? Is this something that's...
No, you don't have to pay for it. So the AUSTRAC website has a portal.
Yep.
Banks obviously have thousands of them, so they upload files into them. It will be up to you as to how you do it. You can either do a batch upload on a file within the timeframes that you've got, or you can I'm very sure that technology such as yours should be able to plug into it. And then you have a report that mimics the report that's online. It goes through someone submits it in your company, someone approves it in your company, the approver, whether it's the MD or it's the AMCO, however you set up the governance, you will need to do some governance, by the way. And by that, I mean, what are the roles and responsibilities and how information flows within your organization. It's a separate conversation. It's not a key obligation, but it's something you need to understand, because that is how your organization will structure and the operating model that will sit around AML CTF. And then that someone ticks it off, and then you can submit it automatically. Sorry, long answer.
No, that's fine. The SMR, I think it's going to hopefully, I don't think it'll be that difficult to do.
It's not, there's no black and white. It's not right or wrong.
Yep,
right?
cool.
If you think something's not right, just pop it in.
Yep, better to do it than not. And I think the other thing, a lot of people's questions from today is list of actions, like how to set it up, what's the process, what do they need to do? And I think that comes back to our next session. We'll wrap up today. Really appreciate everyone coming in. We're going to have more resources, more things coming out in Seamlss, and I'm sure AGS will do the same with LYRA. If you need help and support, reach out. But next webinar, we're going to design it around where you're at now and what the next steps you can take. And yeah, if you've got any questions, please reach out, and we're happy to assist where possible.
Thank you very much. And yeah, look, if you do need some help, the sooner the better, because it is getting quite busy. And it will get only busier from Feb onwards. So I'm just encouraging people to, if they do need help, and we've got a couple of different options, you can have like a full end-to-end implementation, or you can have an AML immersion day with a hag. And the two things are quite separate, obviously, and then we can just kind of go through everything end to end. But I am starting to get a few people inquiring, and we've actually got a few things on the go.
Busy.
So yeah,
busy. And I think that's the problem. Don't leave it to the last minute. Like, the bigger your firm, the more work you're going to have involved. And I'm not saying small firms don't have any work to do, but I think it'll be a lot easier to check some boxes. Like, we have to register by, get it registered in April, and then get your things in order. And then we don't actually have to do anything until July the 1st. But you can't just do this on July 1st. We really need to be ready before July the 1st, especially being registered and having our processes in place. I'll make sure that Seamlss will help us do a lot of this as where possible. But I think the key is that let's get started. And yeah, if you're not sure where to start, join us on the next one. Does that sound good, Dags?
Sounds great. Thank you very much.
Appreciate it. Thank you.
Everyone.
Thanks, everyone. See you. Bye. All right, I'll wrap it up there. Stop.